David, it's a time of succession at Carlyle. I had a feeling, I have to tell you, when you started hosting a television show, that this moment of transition was coming. Why did you, Bill Conway and Dan Daniello, decide now is the time to move on?
Well, our firm is in very good shape, and so we wanted to make a transition when we were in good shape. We didn't want to give our successors a lot of problems. Secondly, we are 68. Bill Conway and I are 68 each, and Dan Daniello is 71. So at some point, chronologically, it probably makes some sense to have a transition. We have people who've worked with us for a long time. We know them quite well, and we're still going to stay involved in the firm. I will be with Bill Conway, the co-executive chair, and Bill will also serve as co-CIO. So we're not walking away, we're just changing our roles a bit, but we do let the new people run the firm day to day as of January 1.
How much leeway are you going to give them?
Well, a fair amount. You can't have a successful transition if you are helicoptering over the people. So we don't want to be helicopter parents. We don't want to hover. We want to say, look, we're going to keep involved. We'll help you as we can and tell us what you want us to do, but you guys run this thing day to day.
This was largely a decision that was yours to make. When did you personally, when and why did you decide that it could have happened at 67, it could have happened at 69? Why 68?
Well, Bill and I and Dan have worked together for 30 years, and it's a great partnership, but we began to feel at some point that it's time to hand over the reins to younger people. It's not clear that people who are 68, and 71 are the best leaders of the future. And so we didn't want to wait till it was too late, and also we didn't want to wait till people say these guys should go. Nobody was saying we should go, so maybe that's the best time to go.
And why these guys, Glenn Youngkin and Kyu-Song Lee?
Glenn has been with us for 23 years. I recruited him from McKinsey years ago. Extraordinarily talented person. He's worked in Europe and the United States for us. Kyu-Song I helped to recruit about 4 years ago. He was from Warburg Pincus. He had left Warburg. They both have very good investment skills, very good people skills. They have complementary skills. So we're very, very confident that they'll do a good job.
What are you doing, David, to avoid the GE curse? You remember when Jack Welch handed the reins, if you will, to Jeff Immelt, and 3 of the best managers in corporate America left GE. The same thing has just happened to KKR. Alex Nawab has left. What's Carlyle doing about this risk?
Well, we have 3 people that we've put in significant positions. I should have mentioned as well Pete Clare, who's going to be our co-CIO. I'm not aware of anybody in the firm who's a senior person who's not happy with this, and as a result, I don't expect any senior people to leave. So I think we have a very good transition. Now, people leave firms from time to time, but I don't believe anybody is going to leave the firm because of this decision.
It's awfully hard, David, to succeed a founder or a group of founders. You know that. You guys started this firm because you're entrepreneurs at heart. And the people whom you hired, as much as you may love them and as much as you may think of them, can't be the same. They're not made of the same DNA as you 3. How does Carlyle keep its edge?
Well, you always have to get good people. So, for example, on my show on Bloomberg, I interviewed Satya Nadella recently. He wasn't a founder of Microsoft, but he's increased the market cap by $250 billion in about 3.5 years. So it's clear that you can succeed a founder and do quite well, as Satya Nadella did. And we think these people have entrepreneurial instincts as well. It's not that they're founders of the firm, but they have very entrepreneurial instincts. So we're very comfortable to do a good job.
There are some things Carlyle has done exceedingly well. It has become a $170 billion asset manager. It has delivered returns to its limited partners and to its shareholders. It has not done some other things as well, diversify, for example. What are you hoping that Kyu-Song and Glenn do differently than the 3 of you have done?
Well, we've made a lot of mistakes. Hopefully they will not make those mistakes. They may make different mistakes, but they probably won't make the mistakes that we've made because they've seen some of the things we've done that didn't work. But on the whole, the firm has done quite well. Remember, we started from nothing in 1987. We built one of the largest global private equity firms. And I think we're pleased with where we are. But we didn't make everything work perfectly. But in any business, if you try things and they don't always work, you have to keep trying. In the end, if everything you try is doing very well, you probably aren't trying enough things.
So what do you want them to try that you haven't tried yet?
Well, I don't want to tell all my competitors all the things that we're going to be trying to do, so I don't want people to watch and say, well, these are the guys who are going to do this, we're going to get there ahead of them. But we want to do some areas that we're not in now, and we want to improve some of the areas we're in, but I don't want to telegraph it now. And again, it's not my decision to announce these things. I want to let the co-CEOs say what they're going to do.
What about the debate between diversification and focus? Carlyle, as I alluded moments ago, has made a number of efforts to branch out into other areas. A couple of them have been successful, several of them have not been successful. Is diversification still the mantra, or is focus a better approach for these guys?
Well, we want to diversify, we make sure our investors have a wide choice of things in which they can invest. Every time you decide to diversify or do something different, it isn't always going to work. Every company, Microsoft, Apple, Amazon, Facebook, they all diversify from their core business. Sometimes those things work, sometimes they don't. Most of the things we've done have worked, but not everything.
David, Carlyle is a very client-focused firm. You know that much better than I do. You spend so much of your time with clients. Were any of your major shareholders or large limited partners involved in any way with this transition decision? Did you consult them? Did you seek their advice?
Well, we didn't consult them. We didn't seek their advice because we kind of sensed over the years that they were very happy with what we're doing. But we did telegraph at our recent investor conference and other conferences we've had that we thought a transition at some point was probably going to happen. And when we called people right before the official announcement, it wasn't anybody saying to us, that's terrible. They all said, hey, probably a pretty good idea. So that's good.
Does it surprise you that Carlyle is the first to actually give, in this case, two new people co-CEO titles? There was a succession announcement a few weeks ago from KKR, but those guys are becoming co-presidents. George and Henry are still very much around as co-CEOs.
Well, there has been other...
Because all of your firms all of your peers confront the same challenge.
There have been other transitions. Mitt Romney gave up the ownership, really, of Bain to people. And Warburg Pincus, the founders of that firm, those two founders gave up years ago the title of the publicly traded firms, the big four publicly traded firms. We're the first to do exactly this, but everybody has to do what's right for them, and I don't know what's right for us is necessarily right for the others, so everybody make their own decision about what's right for their firm.
Why is it that you and Bill are becoming co-executive chairman as opposed to taking one step further back and just becoming co-chairman? Executive denotes something, and it feels to me like, forgive the analogy, supervised play versus unsupervised play. Unsupervised play, the kids are in the classroom, the teacher's down the hall. Supervised play, you're still in the classroom. You're still going to be in the classroom.
Well, I don't think that's a fair analogy. First of all, Bill will serve as the co-CIO, so he is going to be involved, and I'm still going to be meeting with investors and doing things like interviews like this for our firm. So I don't think it was fair to say we were going to be only passive and show up at the board meetings. So we wanted to make sure people recognized we weren't walking away.
How much of your time would you say you spend on Carlyle business today, and how much will you spend on Carlyle business once this transition takes place in January?
Somewhere between 40 and 50 hours a week on Carlyle and 40 and 50 hours a week on nonprofits or philanthropic things, and I expect that will continue to be the case. Now, I may do some different things at Carlyle. I may have more time to do some travel than I did before. I won't have to do the earnings calls, and that will take some time away from things that I can otherwise do.
Will you be spending more time here in Saudi Arabia? I asked the question because you're well aware Steve Schwarzman of Blackstone was here several months ago. He walked away with a $20 billion check. I have to imagine you wouldn't mind getting a $20 billion check from the Public Investment Fund.
If somebody wants to invest with us, we're always happy to take their money, assuming that we can do a good job for them. There's no doubt a very good opportunity here to invest in the region as well as this country, and we have invested here before. And we think in addition to investing in the United States, we think investing in the emerging markets, of which Saudi Arabia and the Middle East is one, is a very attractive opportunity.
Blackstone clearly came here with a pitch, the infrastructure pitch. What is it that Carlyle wants Saudi Arabia to understand it can do better than anybody else?
I don't want to say we can do something better than anybody else. I think we can do very good things in a number of areas. Other people probably do it as well. I don't want to make my presentation to you, but if someday you're running a sovereign wealth fund, I will make the presentation to you. But at the moment, I think I'll keep what my comments are for the sovereign wealth funds that invest with us to them directly.
David, Carlyle, as I mentioned before, manages $170 billion, as you pointed out, up from zero in 1987. Again, going back to Schwarzman, and there's a reason for it. He and I had a conversation here in Riyadh yesterday, and he said Blackstone has intentions, plans, if you will, of doubling its assets in the next 5 years to roughly $800 billion. And Blackstone has doubled its assets over the past 5 years. So they're planning to continue on the same pace of growth, even though they've become so much larger. Where does Carlyle plan to be in 5 years?
We haven't really said something publicly about that, so I'm not going to say that something now and say something we haven't publicly told others. Although I'd like to make news for you, I don't really want to say that. We think our firm is in very good shape. We continue to grow. Assets under management will grow, and our quality of investments, I think, will continue to be very good. But I don't have a specific number.
Steve said it's possible that Blackstone may become a trillion-dollar firm. Is it also possible for an alternative asset manager to be too big?
Well, I'm not sure. Many years ago, people thought if you managed more than $20 billion, it was too big, or more than $100 billion, it was too big. So as the world changes, I don't think $1 trillion is too big. I don't know what Blackstone will be or what Carlyle will be at 5 years from now or 10 years from now, but I don't think it'll be too big. Remember, BlackRock is now, what, $6 trillion or something like that under management? So who would have thought that would have happened when they started their firm about 1988 or 89? So it's just hard to say.
But in principle,
well, we are very ambitious, just as Blackstone is, and we think we can do a very good job for our investors, and I'm sure Blackstone will do a good job for their investors, but we don't have any limits.